Welcome to The Explainer. Today, we're tackling the big question. Is it too late to get into crypto? We've distilled a deep dive conversation between expert George and analyst Kevin to give you the essential takeaways.
All right, let's just jump right in. This is the one question that's on pretty much everyone's mind, right? Have I missed the boat on Bitcoin? It's exactly what crypto pro George and financial analyst Kevin spent hours debating. So, has that train already left the station? Let's find out.
So, here's how we're going to tackle this. We're breaking their whole conversation down into 6 key parts. Think of it as your roadmap to the crypto world as it stands today.
First things first, we got to talk about Bitcoin's famous cycle. You know the one, the crazy booms and the dramatic busts. But the real question is, and you hear this a lot, is this time actually different?
Okay, so the engine behind this whole pattern is something called the halving. It's basically baked right into Bitcoin's code. It's an event that happens automatically, and its whole purpose is to make new Bitcoins harder and harder to create. In other words, it's designed to increase scarcity. And what this does is create a pretty predictable 4-year cycle, at least historically. You get a few years of things kind of cooling off and finding their footing, but then you hit that 4th year, the year after a halving, and that's typically when things get explosive. Guess what? That's the part of the cycle we're in right now.
But, and this is a huge but, there is one massive difference in this cycle. It's not just regular folks buying in anymore. There's a new player at the table, and they have way deeper pockets. We're talking about institutional adoption.
So who exactly are these new players? This is super important because who's buying tells you a lot about why they're buying, and that could change everything. I mean, look at this list. We're not talking about small fish here. We're talking about public companies like MicroStrategy and Tesla adding Bitcoin to their treasury. We've got legendary hedge fund managers and, get this, the very same Wall Street banks that used to call it a scam are now falling all over themselves to offer crypto services. And you have to understand, these guys aren't just chasing a trend. They're looking for a safe harbor. They want an asset that zigs when the stock market zags. It's all about preserving their wealth, especially with inflation concerns. For them, Bitcoin is starting to look like a digital life raft in a stormy sea. Okay, so this brings us to the big fundamental question, right? What in the world actually gives this stuff value? I mean, it's just digital code. Isn't it just a game of hoping someone else will pay more for it later? Okay, check this out because this slide completely flips the script. Instead of asking how many dollars for a Bitcoin, it asks how much Bitcoin can $1 buy? And whoa, look at that trend. It tells you less about Bitcoin going up and more about the dollar's buying power going down, at least in this context. And really, the whole argument comes down to this one simple, powerful idea. Bitcoin's supply is capped. There will only ever be 21 million, period. The dollar? Well, more of that can be printed anytime. One is designed to be scarce, the other is designed to be, well, not. And for anyone who says Bitcoin's value only comes from selling it to the next guy, George had this great point. That's literally how almost every other valuable asset works. Think about it. Real estate, art, collectibles. Their value is what someone else is willing to pay. Why should this be any different? All right, but the crypto world is so much bigger than just Bitcoin. I mean, that's just the gateway. So let's take a quick peek into the rest of this wild and expanding universe. So you'll hear this term altcoin. It's simple. It just means any cryptocurrency that isn't Bitcoin. Think of Bitcoin as digital gold, and altcoins are like every other company, startup, and experiment in this new digital economy. It's a huge, sprawling ecosystem. So how in the world do you navigate all that? Well, George suggests a really simple rule of thumb, the 50-25-25 rule. Half your portfolio in Bitcoin as the stable anchor, then a quarter in the big, more established altcoins, and the final quarter for the smaller, more speculative bets that have that higher risk, high reward potential. Okay, but let's be real. With all this talk of potential comes massive risk. We have to talk about the scary stuff, the FUD, fear, uncertainty, and doubt that you always hear about. Here's a big one. What happens if the price totally crashes? Wouldn't all the miners just turn off their machines and go home? And if they do, doesn't the whole network just die? It's a great question, but here's the brilliant part. The person who created Bitcoin thought of that. There's a difficulty adjustment built right into the code. If a bunch of miners quit, the network automatically makes it easier to mine, so it becomes profitable again for the ones who are left. It's designed to always keep running. It's a self-healing system. But that's not the only risk, not by a long shot. You've got to be ready for extreme volatility. I mean, stomach-churning price drops. You have to watch out for scams and hacks. And nobody knows what governments are going to do. Plus, yeah, sometimes the communities can get a little tribal, which can make it hard to ask tough questions. All right, let's zoom all the way out for the last piece of this puzzle. Because if you only focus on the price, you're missing the big idea, the really revolutionary concept that's powering this whole thing. What we're really seeing is a battle between two completely different ways of doing things. You have CeFi, or centralized finance. That's the world of banks and brokers we all live in, where you have to trust institutions. And then you have DeFi, decentralized finance, which runs on crypto. Here, you don't trust a company. You trust the code, which is open for anyone to see. And that right there is the fundamental battle. This isn't just about a new asset to invest in. It's about a whole new parallel financial system being built from the ground up, one that questions the very need for the old one. So when you ask, is it too late? Maybe that's not even the most interesting question. The price is going to do what the price is going to do. The real question, the one that should keep you thinking, is this. The internet decentralized information for everyone. Could this technology do the exact same thing for money itself, for value? We're watching that experiment play out in real time, and that's a question worth paying attention to.